Hi everyone, I'm Ed Blake, Head of Rates Markets Europe at IGM, and I'm joined by Tony Nyman, Manager of FX Fundamentals. So we've seen the US dollar break lower over recent sessions. What are your immediate thoughts, Tony?
Thanks, Ed. Broader dollar losses initially accelerated as markets responded to the more aggressive 50 basis points rate cut by the FOMC Wednesday. Expectations ahead were slightly in favor of a smaller 25 basis points move. Interestingly, high beta and risk-on FX have outperformed, with the havens and Swiss yen and the franc relative losers, as Fed Chairman Powell said, starting with a big move while the US economy is still strong, would help limit the chances of a downturn. Investors, for now at least, seem to agree with the Fed that a soft landing can be achieved. In terms of the broader dollar outlook, to an extent, markets will stay data dependent for assessing the timing and aggressiveness of future rate moves. So US Q3 GDP and initial claims Thursday, and personal spending and PCE price index releases Friday will garner plenty of interest. Also, there are several Fed speakers this week. We will be looking to see whether other board members share Powell's apparent confidence over a soft landing, how close others were in dissenting with Bowman for a smaller 25 basis points easing, and what comes next in terms of 25 or 50 basis points increments. Ed, do you see dollar downside intensifying in the coming weeks?
So we've already taken out some key longer-term levels on cable and on dollar yuan, and there are other majors poised to follow suit. The Australian dollar is threatening the DEC 23 high at 68.71. The clearance of this and the June 23 lower high at 69 figure would then mark new 19-month highs out towards the Feb 2023 peak at 71.58. We're also looking at the Swiss franc, which is consolidating currently above September's 83.75 low. A downside break there reopens the DEC 23 low at 83.33. That's a key level because if we break below there, we're looking at new 9.75 year lows with initial risk to 82.41. That was a level from August 11. Do you see any dollar downside intensifying, Tony?
We do, Ed. Now that the long-awaited rate cut has finally happened, we think dollar losses could accelerate in the weeks ahead. There is a school of thought EU and Japanese institutional investors, as well as Asian corporates, could begin to liquidate some of their huge portfolios of US assets and dollar risk as hedging costs fall. Ed, are there any levels you're particularly looking at elsewhere in dollar G10 pairs?
Yes, Tony. There are a number of majors which are poised to break significant levels. Here is a table outlining some of those movers with short and medium-term targets. You can see there that Eurodollar, we've recently stalled under August's 112.02 peak, but we look poised for a return above there, targeting the 2023 top at 112.76. If we can break that level, then we're looking at new 2.5-year highs out towards 114.95. That was a lower high from Feb 22.
Interesting you say that, Ed. We feel the same. A move on 115 in Eurodollar looks possible near term. However, Euro crosses have been underperforming as independent drivers weigh. Already this week, German data via preliminary PMIs for September and the latest IFO business survey have been weak. Southern Europe continues to outperform core EU countries despite the fillip of the Paris Olympics, and growth concerns and expected softer inflation data could persuade the ECB to cut interest rates once again in October. Ed, you've just published the Q3 technical analysis outlook. Could you give us a quick note on what's being covered?
Yes, Tony. They were published yesterday. That's Monday, the 23rd of September. We published three quarterly outlooks covering rates and FX, emerging market FX, and equities and commodities. So that's 43 instruments in total. They're available on our website. If you aren't already a subscriber, please head over to our website to request your free trial of our service. Thanks very much for listening, and we'll catch you on the next video. Bye-bye.